Everybody, I'm Paula Rojas, Managing Director of Synergy Resource Capital. Welcome to another webinar of a series focused around natural resources and technology. Today, we're going to do something a bit different. Some of you watching know that Synergy has partners throughout Latin America. In this episode, we will talk all things Peru with our representative there, Saenz from BLB Advisory. We will cover general trends in the investment scene in Peru, how the mining sector is structured and financed, how the country coped with COVID, and to close, we will talk about the impact that the upcoming elections could have both in foreign countries and the mining sector in general. So make sure that you stay until the end. Know that this will be a two-part episode because it was just so much to unpack. So without further ado, let's get started. Saenz is the co-founder of BLB Advisory. Lucho is a finance executive with over 25 years of experience in mining, finance, and metals trading, with a focus on Latin America. Most recently, he was CEO of Compañia Minera Quiruvilca and Director of Business Development for Latin America for Ausenco. Lucho is a founder and former CEO of Li3 Energy, and now he's a Director of Bearing Lithium, which holds a stake in the Maricunga lithium project in Chile, and Director of TSX listed Atico Mining. The company is operating the Roble Mine in Colombia. Throughout his career, Lucho has held senior roles with Standard Bank and Merrill Lynch, among others. Lucho is based in Lima. Let's get started. Let's talk a little bit about your experience in Peru and the mining sector in general. If you can give us a very quick overview of that.
Yeah, sure. Hi, Paula. Thanks for having me. That was quite the introduction. So I'm not sure what I can do to top that. But I've spent the better part of my life, for all of my career, looking at mining finance in Latin America. First based in New York, then moved down here to Peru with Standard Bank, and spent a total of 10 years in Standard Bank between New York and Peru, developing the mining business for the bank in Latin America, based in Lima. So that's giving me a pretty wide experience in terms of mining products and mining development in the different stages of development, from exploration through to early stage financing, project finance, construction, and through production and final product. So, I've seen a lot of the companies that today, for example, in Peru are the mid-sized companies. I've seen them, when they were beginning, in terms of their asset base and growth over the last, I guess, 20 years. So it's been a very interesting experience. It's given me a lot of exposure to Latin America, and particularly Peru, in terms of the cycles, right? I mean, I've seen gold well below $300. I've seen silver at $4, and now I'm seeing, gold where it is and silver above $20, and it's a different world. So it's been good.
Thank you, Lucho, for that. That was you've had a really interesting career. Let's talk about Peru in terms of investment. To give the viewers a general overview of what the general opportunities are, what the general scene is, and what you can tell for someone who's never been there, who's not invested there, what would be a basic overview of the investment scene in Peru?
Well, I mean, Peru over the last couple of decades has been one of the darlings of mining investment. Okay, I mean, a lot of exploration money. Peru has had a stable economy and political scene, for the last 25 years plus. Democracies always with a little bit of uncertainty, as we will discuss a bit later. But overall, I mean, the investment climate has been very good. I mean, in the early part of in the 90s, there were a lot of privatizations, and that brought a lot of investment in large projects, as well as large companies. I mean, some of the largest miners are here in one form or the other. And Peru is home to a number of very large operations. But Peru ranks amongst the top 5 countries in the world in the production of gold, copper, zinc, silver, lead, tin, and I'm sure I'm forgetting a couple more out there. Okay, so that is testimony of the kind of climate that Peru has had. Of course, all of Latin America has been blessed with a lot of natural resources, but I think Peru's found a pretty good combination of rich deposits, size, stable investment environment, good workforce, decent cost structure, and that's contributed to a huge investment in mining. Today, mining exports probably represent about between 60 and 70% of Peru's export earnings. Obviously, depends on commodity prices, but we're going through tough times. But that's where it's been for the last 15 or 20 years. It's fair to say that mining is probably the biggest part of Peru's economic engine right now.
Wow, yeah, it's quite evident when you visit the how integrated mining is into the fabric, the social fabric of the country. Like you can sense it. Like for me, traveling the first time was I think it was 2010. And that felt quite different than other countries except for Chile, obviously, that it's probably at the same level, but you can sense it and it's quite remarkable. In terms of
yeah. I think one of the things, Paula, for example, when you mentioned Chile and the differentiation between Chile and Peru is that, I mean, Chile has very large projects, but very few mid-sized companies, right? Peru has a very large mid-sized sector, and it's grown from being single asset companies into multiple asset companies. You've also have a huge exploration sector, right? From very early stage exploration. I mean, you have 100+ junior companies here, clearly, and so and that's been going throughout the years. So when an investor comes to Peru, the investor can actually choose the area, on the risk profile of the development stage. I mean, if the riskier you want to get, which means probably riskier, risk versus return, you've got all of it. You've got the very early exploration, still untapped areas in Peru. A lot of stuff that has been looked at before and is now being looked at with new eyes, new technologies, new knowledge, etc. So there is still a lot of that. So of course, very mature, mature operations that are looking for changes. I mean, you've got greenfield, you've got brownfield, got expansions, and you've got all sizes. I mean, we've got, I'm advising right now a company that is doing an exploration program for $2 to $3 million. I'm also advising a company that's raising about $600 million worth of project finance. And on the other end, above my pay grade, some would say, you've got the Quellavecos, right, that are, $5 billion plus investment. So you really have a very wide range in Peru. That's also attractive, right? Yeah.
I think you've obviously pointed out a very meaningful difference between the countries, as similar as they can be in terms of being mining countries. They do have a very big difference in terms of that middle sector and the amount of companies. I think it's important, or would be important or interesting, for if you could talk a little bit more about that middle sector, so that intermediate producers and explorers. That there's many. I know there's a lot of family-owned companies that are super active and very successful. It's a very strong sector of the economy. I think that's an interesting sort of space to qualify or to give some more details on, if you could.
Yeah, sure. I mean, you've got it particularly on Peru is very big on the polymetallic sector. I mean, these underground mid-sized operations operating at anywhere between, I don't know, 300, 500 tons per day up to 5,000 tons per day, maybe a bit bigger, 7,000 tons per day, that are producers of zinc, lead, usually with zinc, lead, copper with silver content, etc. That's a very big mid-sized mining. You've got gold operations, underground and open pit, that will be producing anywhere between 40, 50,000 ounces to 150,000 ounces a year. And these companies are typically family companies. A number of them, some of them have listed in the Lima Stock Exchange, but most of them tend to remain private. They're in their next generation of management. Many of them have taken steps towards introducing corporate governance and started sort of getting more professional, independent management and board members as the generations go by. As you say, it is a very active sector. I mean, typically, and I think this is sort of like not a Peru number, but a global statistic. I mean, for every job of one miner creates between 3 and 6 jobs, indirect jobs in the sector, right? So that mid-sized sector is very important to the economy. There are towns in the middle of nowhere that rely on this one mine that operates in that area. The larger the operations, the Quellavecos, the Antaminas, actually they might be very large in terms of investment, but they're not very intensive in terms of hiring because they're all mechanized, they're automated operations. Whereas these operations, it's not uncommon for these operations to employ, between 500 and 1,500 people. Okay, miners and contractors on the mine itself. So that's creating opportunities for several thousand people. So it's a very big part of the economy. And obviously, as they grow, they integrate. There's consolidation, etc. But yeah, the mid-sized family type companies are still very important in the sector.
If you could generalize, if you can, do you think that group, that the family-owned companies are open to having international partners and sort of grow together in some sort of combination or joint venture of is that something common in that space or not?
Well, I mean, I would say that it is common, okay? Or the theme is there and has always been there. I mean, you've had brokers from the TSX and London come down and talk about listing and, you know, taking the companies public. You've had a very active private equity investment, you know, private equity groups, you know, really visiting Peru for the last few years. There's been a lot of investment interest, and there have been transactions. You know, it's not without its complications, right? I mean, dealing with families, many times expectations are, well, you know, it's very different. It's very difficult to manage expectations versus valuations, right? And it really depends on the moment of the cycle where you're having these conversations. So, you know, that's always been a challenge as companies, as these family companies become used to being more international and the transparency that's required. They themselves start seeking the corporate governance, having independent board members, more transparent financials, if you will, you know. So it's that market is changing, and that makes those conversations easier, right? But a lot of times it's, you know, the family companies are also very, very closed, and they're not they're distrustful of the markets, right? However, you have, you know, certainly you have companies that have grown quite a bit. You know, probably the most prominent one in the last few years has been Hochschild. I mean, they went from a private company to, you know, listing in the London Stock Exchange with a fantastic valuation, you know, and it's been a very successful company. I mean, they've grown quite a bit, but you know, they were a private family company for a very long time, and they managed that change very successfully. So, you know, I'm sure they're not the only ones. As I said, probably the biggest challenge is expectation versus valuations, and that's actually what, you know, I do in terms of the advisory, and you do in terms of the advisory. Try to, you know, build those relationships and understand what keeps people up at night, you know, in terms of these family companies, and, you know, as the next generation comes, whether they want to, you know, what comes next for them, and whether they want to continue in the family business, and whether they want to continue with that dream. I mean, you know, a number of these companies, family companies, were founded by, you know, some of the most prominent mining names in Peru. You know, the Arias, the Benavides, and you know, people in that circle who were really pioneers of mining in Peru, and were, you know, they were the old guard that discovered, you know, hundreds of mines in Peru. Some of them, you know, that have become, you know, some of the largest mines in Peru, and the largest mines worldwide. So that obviously passes time. I mean, that was, you know, quite a few decades ago, and, you know, 1 or 2 generations ago, and the new generations might not want to pursue that. So they're adapting to that change, and it hasn't been easy, but they're adapting to that change.
Yeah, it's a very good characterization that you just gave, and I think Hochschild is a really good example of that evolution. I had the opportunity to work with them years ago. Before, I think it was just before they went public. We were working with Minera back then. You know, they were partners in that mining in southern Argentina, in Santa Cruz. And I got to see sort of the transition of you know, liaising with a group that is fully private. That was so different to what I was, you know, more used to for the public companies, and then see them shift and professionalize, if you will. Not that the original owners didn't know what they were doing. They knew what they were doing. That's how they grew. But as you said, at some point you need to do corporate governance. You need to make sure that your financials are up to par to the markets and all of that. So I think it's a great success story, a Peruvian success story. They've done really well. So. So I agree with that. With you picking that example, it's a very good example.
And I think one of the big drivers, right, has been that generational shift on whether the future generations wants to stay in the business or not. But another one has been, the huge shift in valuations in the last call it 10 years or so, right? I mean, before, growth was very much cash flow oriented. I mean, if you were going to grow, it was out of your own cash flow. Debt was largely unavailable. And the price for assets was reasonable, right? I mean, gone are the times where you're going to buy a mine for $10 million. I mean, it's, you can buy an exploration project for $10 million, but you're not going to find an operating mine for $10 million, right? I mean, I'm not going to start talking about examples because then, you've actually, but I remember some of these companies were, worth $10, $20 million. When I was first coming here at Standard Bank, and those were risks that no banks would take, and Standard Bank was a mining bank, a resource-oriented bank, and we had our own mining people and our geologists and our engineers, and we could assess those kinds of risks. So those risks were natural for us, but not for a typical bank. And we would evaluate these companies for trade finance lines and hedging lines, and we were the first ones to bring that business line down to Peru and Latin America, many places in Latin America. And I remember these companies being worth $10 to $20 million. I mean, that's where they were valued. And today they're valued multiples of that, hundreds of millions of dollars. And the mine has grown, the operation has grown, but it hasn't grown 10 times. You know what I mean? It's gone from, 1,000 tons per day to 3,000 tons per day. But it hasn't, but the market value of that asset has gone up 10 times, right? So values have also changed. But by the time the smart money was looking at Peru and started investing in Peru, and the first comers obviously, had that first comer advantage. But times have changed dramatically.
Do you think the reason they you were saying that the first driver was the generational challenge, that if the part of the family is not interested in continuing, then you need to figure out what to do with this monumental thing that you've got. And then you're seeing the second driver. Would you say that it was them realizing that this is such a big opportunity to get that uplift in taking a public listing, or was it more a sort of normal evolution of okay, let's do this, but they weren't particularly thinking about, now this is going to be worth 10 times?
Actually, I now I remember why I started telling you about that evolution, because the first driver was that generation change, but the bigger driver was that if they wanted to grow, they needed to start accessing the capital markets, debt, equity, private equity, etc. And for that, you had to have, transparent finance.
Yeah.
You needed to have a corporate governance. You needed to have systems in place. I mean, it was, these requirements were there, and you had to make those changes. So it was a value driver, obviously, because, I mean, as you realize that by doing these steps that are actually good for the company as well, you generate value because you can show yourself to a wider universe, to a wider audience, right? But also because it was the only way for them to grow. I mean, the cash generation of these assets was not enough to buy another asset. It was that simple.
Yeah.
So, and to access the debt and equity markets and be able to grow was necessary. Yeah. For example, I mean, if you mentioned at the beginning that I'm a director of Atico, and that's one of the companies that was founded by the Ganosa family, which is a very well-known mining family here, and they were the founders of Fortuna, right? And I mean, I remember when Fortuna acquired the Cayoma operation from Hochschild, which they acquired it for a very, very small price at the time, and then they went on to acquire and develop San Jose in Mexico, right? And they were clients of ours at the bank, and we knew them very well. And they actually were looking for financing for Mexico, but in the end, they got a nice uplift in prices, and they largely built San Jose off of the cash flow of this little mine, Cayoma, in Peru. And Fortuna just today announced, a merger that's taken them to become a billion-dollar company, expanding to Africa and becoming more of a gold producer than a silver producer. And I saw that company from inception, and I mean that's one of the opportunities that went from basically being a publicly listed company and that growth that could only have come from being publicly listed, right?
Yeah. Do you think there's a component in this sort of such a good foresight and vision, if you will, knowing that these Peruvian companies were planning from the get-go? They were like, we're gonna produce, like, this is what we're gonna do. Like, we're not gonna just explore and find interesting projects, but they had from the beginning, even whenever it was that they started, some of them may have started 30, 40 years ago, who knows? But do you think it's because they were more practical in that sense?
Well, it's entrepreneurial, right? I mean, when you have a limited amount of cash, you're going to do whatever you can to generate cash, right? What the public markets do is they allow you to take your time to generate cash flow, because they continue to give you money, equity money, against news flow, right? I mean, that's part of the game. But when it's your own cash, I mean, drilling it out is not really going to help your economy at all. Yeah. So you go for the more practical sense of generating cash flow, right? And you grow from there. You take it from there. And in many cases, I mean, that's still the case. But again, I mean, you've got for every taste in Peru. I mean, you have a lot of not even mid-sized operations, small-sized operations, 20, 30, 50 tons per day. I mean, that's small for Peruvian mining. I think that's small for any, mining anywhere, 50 tons per day. But there's a dime a dozen of those right now with commodity prices where they are. I mean, there's still a lot of, high-grade veins in Peru, all over Peru, gold and silver, copper. I mean, it is not uncommon to hear, some of these high-grade copper veins with 8-10% copper from, ore with 8 to 10% copper. Now, of course, they're extracting 30 tons a day of that, but for what they want to do, I mean, these copper prices, that's cash flow, right? Now, that's not attractive for a junior company that wants to, listed junior company that wants to show that they've got all of this blue sky. But it could be interesting for, you know, an investor that is looking for an attractive return on certain investments. So again, I mean, there's for every part of the spectrum of appetite.
Yeah. And that is it for today. Thank you so much for watching. Make sure to leave us a comment if you have any questions. And if you enjoy this video, subscribe to our channel for upcoming content around investment, emerging startups, and small cap stocks in natural resources and tech. Make sure to stay tuned for part 2 of this episode. Thank you. Goodbye.